Stocks rallying on Wall Street today on renewed hopes of a trade deal. Oil also benefiting from thawing tensions between the U.S. and China. So that got us thinking, what would happen to crude if we actually struck a trade deal, say, tomorrow? Or on the flip side, what would happen if talks were completely to collapse? Let's bring in CNBC contributor Helima Croft to weigh in on the latest development. She's global head of commodity strategy for RBC Capital Markets. Helima, always great to speak with you. I guess we're trying to figure out what the range for oil could be in the best case and the worst case scenario. So let's start off with the best case scenario. How high could we go if there was a deal tomorrow?
I mean, best case scenario, deal tomorrow. We think oil, WTI, is probably going back up to 60. You'd probably get some producer hedging at that point, which could cap the immediate upside. But certainly the physical market is looking better. We've had these inventory draws. We still have a lot of geopolitical tension in the Middle East, still a lot of issues around Iran. And so if we get the trade war off-ramp, we think the geopolitical stories become more important as well as improving physical market stories. So the question is, at that point, could you potentially get back to 66, the highs of earlier this year? I think we need to have more geopolitical noise. We'd have to have OPEC basically coming out in a couple weeks' time and saying they could potentially go deeper. But that's the type of situation to get you back to the highs we've seen earlier this year.
So 66 would not be an issue, even though there's so many economies around the world that are close to or in contraction?
Well, again, we think going to 60 is where we basically make the first move up to.
Right.
The question about getting back up to sort of the highs of earlier this year is, do we continue to see inventory draws? Do we continue to have OPEC out there saying whatever it takes? Because if you look at the OPEC producers, they certainly want prices higher than even, $60. I mean, they're looking more to get to like 70 Brent. So the question is, how constructive are they going to be? And then the issue of Iran. I mean, we do have still a lot of tension involving Iran. We have this shadow war that's going on with Israeli strikes on Iranian targets in places like Syria and places like Iraq. That has the potential to cause a much greater conflict in the Middle East. So those are the type of things that could come together to bring oil back to the highs we were at earlier this year.
Let's go to the downside, the worst case scenario. What would that be in your view?
I mean, the things fall apart scenario. I mean, if we essentially have the talks break off tomorrow, we think we'd certainly be retesting the sort of $52 mark and then potentially going down to about 50. That's on trade war alone. There is even a more bearish scenario, and that would be if the Iranian nuclear talks actually produce some type of breakthrough, and then we start thinking about 2 million barrels of Iranian oil coming back onto the market. That would, I think, be the worst case scenario for oil, because that would be a really big hit to the physical markets. And the question is there anything OPEC could do in that type of scenario to put a floor under prices? So I think Iran is really important to watch, both from a bull case and a bear case.
Helima, great to see you. Thank you. Helima Croft, RBC.
Thank you.
The bull case scenario, does that make energy stocks more investable in your view?
Oh, energy is deep value. I mean, it's all about oil.
Deep value in a good way or in a bad way?
I mean, like right now it looks like a value trap, but I think oil is the pivot, right? What I worry about with oil and crude is just the dollar. I mean, we've had so much kind of consternation about currencies, especially about a stronger dollar, and that's anathema to oil, right? I mean, that's what we really want to think about. So there's supply, there's Iran, there's geopolitics, but there's also the ever-present currency risk of a stronger dollar scenario.
So oil has been in decline for as far back on my chart. You go to 2018, it's been in a series of lower highs, not really lower lows. There is a day of reckoning. So Helima had mentioned what the downside would be. You see 42 as an ultimate downside. But you do see a lot of headwinds for oil. We are still in oversupplied mode in oil. You couldn't have scripted a better scenario for a bullish scenario, bullish outcome in crude, and we haven't gotten that. So I think lower price.
Yeah, and I just would make one point on a geopolitical standpoint. The likelihood of anything happening with Iran right now is not great. If you think about the Israelis have an election coming up very soon. We have an election coming up really soon. This was one of the weirdo situations, I think, that came out of the G7. So I wouldn't think about any optimism about that. And then you could just extrapolate it to the excitement about some sort of deal with North Korea over the last 2 years. Nothing's happening anytime soon. So anything built into the price of oil right now would not be good.
It's interesting. You know, we go to the smart board and do power pitches, and I try to power pitch Devin, and that didn't work out all that well. But yeah, I tell you, you look at a name, for example, look at Schlumberger, This stock is trading at $32. It's lower than it was in 2008, 09. You remember how bad things were then. So as much as you want to say deep value, and she's right, they're extraordinarily difficult to get your arms around, I think, to Steve's point. So you just got to wait these out.